Hey traders, Tradiest Trades here, back with another red pill moment for you. Today we're going to take a look at which COT setups are actually actionable. Actionable. What a weird word combination. But here we are. We're going to do something that we don't usually do on my channel. Usually I'm showing you the setups and explaining why the market is set up for a change in trend. What we're going to do today is look at markets that have been set up previously in the previous weeks or months that have actually changed a trend and therefore are actionable setup markets. Let's take a look. So this week we had crude oil change trend on a confirmed trend change basis using the 20 period moving average. You guys know me, I used to be using the 18 period moving average because that's what Larry Williams teaches. But I had a moment, a little bit of an epiphany, and I thought to myself, 18 is so damn close to 20, and no one else in the financial industry watches the 18 period moving average. Everybody watches the 20, and it's kind of like a self-fulfilling prophecy. So I need to be watching the moving average that most people are watching. It really doesn't make a bit of difference in terms of how I analyze the markets. Just figure I may as well just have the 20 on there. So that's the blue line now. Okay, 20 period moving average. So this week we had the bullish confirmed trend change happen on the 20. So the 20 was not only sloping up, but also we had the follow through. So we had two full range bars. We had this bar and we had this bar, none of which were inside bars, and then this high got taken out on Wednesday. So that's the follow through we look for. So that's the trend has changed bullish for sure, full on for me. I think it's a bullish trend, even though the 200-day moving average is sloping down. So keeping in mind this COT setup is against the dominant bearish trend, much higher time frame trend in the crude oil market, but it's still a very nice COT setup. So what we also see is we're actually overcoming a lot of things. We're getting over the 50 period moving average. It hasn't turned down and rounded out and started turning up yet, but still a good start that the 20-day trend is up. We're also getting above this. I've started watching the anchored volume weighted average price, and this is anchored to the highest point of the year, a significant high. We see we're getting above this, and this basically tells you who's feeling the most pain. And basically, if we're above the black line, that tells us that the people that have shorted the market based on the volume and the most number of transactions happening here, the shorts are feeling pain. And this is also going to embolden the buyers. Buyers are going to feel more confident, and it should see a nice move up. So I'm looking for longs on the crude oil market. What that would look like is we get a little pullback, bump into the 18 period moving average or the 50, or even this volume weighted average price. We get a little oversold on the percent R, and that's a nice recipe for long trades. And I think it looks really nice now for crude oil longs. We've let the market confirm that it's going up, which is nice, instead of picking the bottom. Here's cocoa. You know that back here, if you watch my channel, you know we were looking for longs. We got that confirmed trend change right here. We got the nice pull back into the 18 period moving average, presented a nice long opportunity. Same things happened here in the last couple weeks. I still think that this thing is nicely set up for longs. There's no COT setup or fundamental setup on the sell side, so that just means for me, let's just take longs. And the thing I really like about cocoa is that this setup back here was in alignment with a much higher time frame trend. So the 200 day moving average, the black line, was up, so we knew that this COT setup was in alignment with a much more dominant underlying trend, which just made it all that much more nice trend following trade. So what I think on this market is just the same as always. If you get a little bit of a oversold pullback, nice opportunity to long. I don't see any reason why cocoa should sell off because, well, based on the COT and other fundamental indicators, cocoa looks great. Wheat this week, Chicago wheat had a bullish trend change. Kansas City wheat didn't quite get the trend change yet. I anticipate it probably will this coming week, but Chicago wheat is on the list now, and let's look at why. Well, the 20 period moving average flattened out, started to turn up, and what did we get? We got our follow through. We had the two full ranges, this bar on Wednesday and then Thursday's bar, both above full bodies above the 20 period moving average, and then we had follow through the high of Thursday, and that's the confirmation that this trend is up now. We're getting above the 50 is starting to round out, so really nice. So again, keeping in mind this COT setup for longs on Chicago wheat is against the dominant trend, like wheat and like a lot of other agricultural commodities have, other than cattle of course, have been in just a mega downtrend. So this is a counter trend trade against the big time trend, but still, I think we're going to get a very nice move up in wheat. Wheat picked my pocket many times along the way, and it actually inspired me to change the way I'm doing things to just be a trend follower and be a bit more patient and wait for the market to actually confirm my idea. And that's what it's doing right now. So basically, again, oversold pullbacks, looking for long entries when we get oversold pullbacks here on wheat. The stock market indices have not been set up for shorts, so that just for me just tells me just keep looking for longs. This was a setup back here for longs. We've had a major trend change. We've got the 50 period moving average sloping up, we've got the 20-day moving average, and then we also have the 200-day moving average up. So basically, I think unless something changes, it looks like this market wants to go for its all-time highs. So that would mean oversold pullbacks like this one here that came down and bumped into the 18 period moving average. Nice opportunity to work on the long side of the market. And lastly, the only market set up here for shorts that has given us a confirmation is soybean oil. And soybean oil, you will notice the 20 period moving average is sloping down. We had 2 full range bars below, and there we got our follow through right there. So that confirmed the bearish trend. So now what I'm looking for is, we get overbought like we are right now, and basically a short trade would be something like if we trade down to Friday's lows, that would be a trigger to go short, stop above the high, and targeting somewhere down around $44. That would be how I'd look to work at the market. Overbought and sell at the low of that day for the simple, easy way to approach the market. The thing I'm not super excited about on this is the fact that the 200-day is sloping up, and so is the 50-day. The fact, though, that it is a COT setup, this 20-day trend change is pretty potent to me, and it tells me that the setup is probably playing out. But soybean oil has been strong, so to go short this market is it's the COT setup I'm probably the least excited about, but I'll still work it because the trend has shifted. So that's it, you guys. I hope you found this valuable. If you have questions about COT setups or how I'm talking about the markets here, I'm pretty easy to get a hold of. Just shoot me an email to tradiustrades@gmail.com. I can also get you into my free Discord where I share my thoughts on the markets, and we all interact. A great group of guys in there that are actively engaged in the markets. So if that sounds like something you'd be into, you know where to find me. All right, guys, have a good week. Bye-bye.